In today's episode, we're going to talk about Roaring Kitty's $174 million position in GameStop, and I'm going to answer the question that everyone's been asking. What is going to happen to his 120,000 calls that he bought at the $20 strike price that expire on June 21st? It's a $68 million position that has the potential to expire completely worthless. In fact, there are only 4 possible scenarios, and I'm going to walk you through each of them in today's class. We're also going to analyze his profit loss over the last week, and I'm going to share with you what I see as 3 possible outcomes for the price of GameStop over the next week and a half, 2 weeks, because this is a very pivotal time, especially with Roaring Kitty having such a massive position. Now, as you know, the price hit a high of $67.50, which means his options position alone, which cost him $68 million, was worth at one time in excess of $500 million. And then what happens? The company comes out with bad news. The earnings miss. The shelf registration to sell 75 million shares and the price drops 50%. Yikes, this is scary. So let's go ahead and jump into it. We've got a lot to cover in today's class. So these are the topics that we're going to go through, and I'm going to jump right in to looking at his position. So it was Sunday, June 2nd, when Roaring Kitty, Deep Effing Value, posted on Reddit that he was holding 5 million shares of GameStop, price paid $21.27, and he was holding a massive 120,000 calls with a strike price of $20, expiring in just 3 weeks at that time on June 21st. What a bold call. Okay, so total value, $174 million. At the time of the post, he was up $2.5 million. On today's gain, his total gain actually was $6.8 million, which is impressive. And he has $210 million in his account, including $29 million of cash. Now, there's a lot of questions at how he amassed $200+ million, because the last time we knew, 3 years ago, he was sitting with, $30-40 million on that big position. But evidently, YOLO trading over the last few years has paid very nicely. That's what we speculate, because he did say during his live stream that this is his own money. It's not an investor's money. It's not borrowed money. It's his own. So good for him for making that much money trading. Now, on Sunday the 2nd, he also posted this Uno card, the green reverse card right here. And this is when things got pretty exciting. So then on Thursday, June 6th, this was after he scheduled his live stream for Friday at 12 p.m., his P&L has exploded. His value in the account is $586 million. Holy smokes. The 5 million shares he's got at $21 are trading at $46. The 120,000 calls that he bought at $5.67 are trading at $27. And later, we know that the stock squeezed up to $67.50, which made, oh my gosh, I did the math here. It's absolutely incredible. At one point, his portfolio could have been valued in the range of $900 million. It's possible he even crossed $1 billion at one point. Wow. Unbelievable. Okay, this is insane. But what is even crazier to a lot of us is that he didn't take anything off the table. He held the whole position. All right, now that's even crazier. What a YOLO trade. So then we get the earnings miss and the offering from GameStop. And this is Roaring Kitty when he sees Ryan Cohen. You ruined everything. Literally, they crushed the stock. I mean, the squeeze ended right then and there. Let me pull up the GameStop chart. We'll go to the 5-minute time frame. I'll full screen this here. So things were looking so good going into that stream. The stock had squeezed up here to a high of $67. And I was thinking, all right, we're going back to 100, right? This thing's going to the moon. I was excited. Now, of course, I knew I had to manage my risk. I was sitting on the sidelines waiting. And then boom, news comes out from the company. Stock starts dropping, and it drops like a rock. So when his live stream began at, a little late at 12:30, at this point, I don't know what he really could have said that would have turned it around, because this fundamental news that came out from the company was just so bad. Okay, so that was the scenario. And then the next P&L that we see, Monday, June 10th, the portfolio is back at $235 million. 300 million plus gone. Unrealized profit. He didn't sell. He's still holding the whole thing. But now we've got the 5 million shares, which look, he can hold 5 million shares for forever, as long as he wants. So the price is back to $24.83. Now, of course, if the price goes below his entry, he'll be red on the position. But right now, he's still sitting with a total gain. So you could say the cup still has some water in it. It's going to be hard to look at the cup half full when it was with nearly $600 million or $900 million. But in any case, he is still up 17 million on this position. It's nothing to sneeze at. But the options contract, now this is a little tricky because he's in at $5.67, but they're priced right now at $6.81. You can see right here. Well, actually, I could pull up the real-time price for you here. So and we're going to go ahead and we'll do that in just a second. But let me just say that putting $68 million on a short duration options contract shows confidence. And so during the live stream, he said, Roaring Kitty, I believe in Ryan Cohen. And then this person summarizes, even though he hasn't told us a plan in almost 3 years, I believe in him long term, and I believe he has a plan. I like the stock. All in options that expire in 2 weeks. This is crazy. Like, to us, it seems crazy because, I'm such a trader that focuses on trading for consistent income that I can't imagine putting these types of speculative YOLO trades out there. But nonetheless, he did. And at one point he was up 900 million. But let's talk about the June 21st calls, because I think for some of you, you're very familiar with how these work. But for others, I'm going to give you a crash course on what this means. So he has bought a contract. This is how it works. RK, Roaring Kitty, purchased the right to buy up to 12 million shares at $20 per share. So when we trade in options, one contract gives you 100 shares. So when he bought 120,000 contracts, that gave him the right to buy 12 million shares. 12 million shares. Now, this is a contract that has an expiration. So he has the right to buy up to 12 million shares, but it's not indefinite. The expiration here is June 21st. Now, when you trade options, you could choose different expirations. You could choose weeklies, you could choose monthlies, you could choose an expiration that's a year out. You could say, I want to buy the contract, the right to purchase this stock at this price and have that option for a full year. And you'll pay money for that option. Now, if the stock ends up closing at the end of the year or whatever the term is of expiration below your strike price, your option's worthless. No one's going to execute an option to buy stock at a higher price than it's currently trading at. So you lose the money on your option contract, but you had the benefit of having that option, and it was certainly a lot less expensive than just buying the whole stock position, right? So a lot of people like options for that fact. But in this particular case here, Roaring Kitty paid a premium of $5.67. So what that essentially means is that he bought the $20 strike price and he paid $5.67. And that means his break even, you add these two together, is $25.67. That's his break even price right now. Because remember, he'll get 12 million shares, but he paid $5.67 per share, right? So that's how this position cost $68 million. That was the cost of the option contract. Okay, so not cheap. In fact, quite expensive. So he's got a break-even price of $25.67. The strike price plus the premium paid. Now, he has rights, but he doesn't have any obligations as the buyer of this option contract. He can choose to exercise it or he can choose not to. However, the person who sold him this contract has requirements. They will be required to give Roaring Kitty the 12 million shares if Roaring Kitty chooses to exercise his right in the contract. Now, this seller made $68 million. Okay, so they made money writing this contract, but they are now on the hook for 12 million shares. And some people are saying, all right, if he exercises that market maker or that big firm, that hedge fund, whoever it is that sold those 120,000 calls, they're going to have to go out and buy 12 million shares. And that's true. unless they already own 12 million shares, in which case they just have to give him 12 million of the shares they already own. And that's not uncommon. That's a common practice, and that would be a more secure way of selling this position. The high risk way of selling this position would be selling it if you don't already own the 12 million shares. Because then if the stock starts squeezing up, well, what are you going to do? If it starts squeezing up and Roaring Kitty says he wants to exercise, you have no choice but to buy those 12 million shares at current market price. Right? And that's when things get juicy. You get someone buying 12 million shares up here, and that's when we're going to the moon. Things are getting exciting. Shorts are getting stopped out. That is a short squeeze. And, that was a possibility. I think that's what a lot of us were hoping for. Well, but, then the news came out, right? So typically, you can choose to either exercise the option contract or you can resell the contract for its fair market value. So if we look at the current trading price, and I'll just finish the sentence. So, however, option markets are often thinly traded, meaning moving in and out of a big position can be difficult, if not impossible. So these are the $20 strike calls right now. So the $20 strike is right here. That's the strike price. These are the calls, and these are the puts. So with the calls, you want the price to go up. With the puts, you want the price to go down if you're a buyer. So the $20 strike calls right now are $6.50 by $6.85. That's the spread. So, the last price is probably something in between that, $6.50 by $6.85. So he's still up a little bit. But notice this open interest here and the volume columns. So the total volume today is only 4,800 contracts. That's less than 4% of what he owns. So, yikes. Now, right here, the open interest is 166,000 calls, but he owns 120,000 of them, which means he owns 75% of the open interest. So let me hide my video here for 1 second, and I'm going to walk you through the 4 possible scenarios. So scenario number 1, he could exercise the option contract. Exercising the option contract means he says, and he clicks on the button to exercise, and he buys 12 million shares. However, GameStop is non-marginable, which means you cannot invest in it with borrowed money, number 1. So that means number 2, it requires cash to buy the 12 million shares. 12 million shares times $20 a share is $240 million. So the big question is, can he afford this? All right. And we don't know. We've seen the P&L that he's posted. And so we know that his account has, $30 million of cash, which is great, but we don't know how much more money he might have outside the account, right? So let me just pull this up. So this is his user account here. So I'm going to bring this down for Reddit. So right here, you could see he's got $29 million of cash. All right, well, $29 million of cash, that's not enough to buy $240 million of stock. He's going to need an additional $210 million. Now, he might have that. We don't know if this account is all that he's got, or if he made an extra $200 million that's sitting outside the account that he can put back in. It's a little hard to imagine that he did, because this is already an insane amount of money for one person to make from a $40,000 starting balance a few years ago. But, I don't want to say it's impossible, because it's not. So option number 1 is he exercises the contract. He buys 12 million shares, and depending on whether or not the seller of that option contract already has the 12 million shares, they may have to go out and buy it, and that could send the stock higher. But we don't know. So there's a couple of what ifs here. Does he have the money or does he not? And what's the situation with the person who sold him that contract? The second option, and this is what people typically do, is they just resell the option contract on the open market. So when the option contract was trading at $27 in premium, he could have just sold it right then and there. So again, if we look back at his P&L here, let's see, we'll back this up to, let's say, right here. So at this time, it's trading at $27, right? If he had sold all of it Well, at $27, he would have been up 300. He would have had total value of 324 million, which is insane. A $256 million gain. Unbelievable. But would he actually have been able to do that? And I think the answer is no, because there was not enough volume to sell 120,000 calls. There were not enough buyers. Yes, there was someone who was willing to sell him those calls, but there has to be someone else willing to buy them from him. And right now, the market doesn't show that buyer. So I don't think that he actually would be able to sell the option contract at this point on the open market. He owns 75% of the total market in this strike price. And I think selling will be difficult, if not impossible. Now, I could be wrong and he could start slowly unwinding it, but I'm just not seeing that happen as of right now. Option number 3 is to roll out the options until the next expiration. People do this all the time. They're like, oh, well, this is the expiration. What's the next expiration? So let's just pull up the options chain again, and I'll show you what this looks like. So if you were in the $20 strike price calls right here, you could say, oh, well, these calls are expiring on June 21st. I want to roll them out to June 28th. So to do that, what you do is you sell the June 21st calls and you buy the June 28th calls and you pay the difference. He's not going to be able to do that. Why? There's not enough open interest. There's not enough open interest. There's only 2,700 calls of open interest. That's not even 3% of what he's holding. So he's not going to be able to roll them out unless the same person who wrote the calls is willing to provide the market. But any person who is a large enough fund who has the correct permissions can sell contracts. So you could go in here and you could say, I'm going to sell puts. I'm going to sell calls. Now, it's very risky, and because of the risk involved, a lot of brokers wouldn't even let a retail trader do it. So presumably it was not a retail trader who sold $68 million of calls to him. It was a hedge fund of some type of big fund. Okay, so option number 1 right now, let's go back. So option number 1 to exercise the calls is so far the only one that's really viable. He's not going to be able to resell them, and rolling it out requires reselling them. So the 4th option is letting the contracts expire. That means you lose the full $68 million in premium paid. It's gone. So the person who wrote the options wins and you lose. So at this point, his only options that I see realistically are 1 and 4. Now, number 4 is a terrible option. Number 1, he buys the stock, right? Now, if it's trading at $21, he's still losing on it because $21 is only $1 a share above his entry, and he paid a premium of $5.67 a share to take the position. So his break even, as I said before, is $25.67. Anything less than that, he's losing money on this options position. And as we sit right now, I mean, it's not looking great. So I think his best scenario is to exercise the option contract or cut his losses. Those are really his only 2 scenarios. And if he exercises the option contract, it seems that he may need to get more money in his account. Now, it wouldn't be probably too hard for him to find some investors, but we're talking about $240 million. It's a lot of money. And a lot of money in a company that just put out an earnings miss, that's diluting the value of their stock over the last month by 25-30%, and has a legacy business model. It's a brick and mortar business. They haven't successfully transitioned. There's a lot of potential, and now they will have $4 to $5 billion of cash to help them with this transition, but will they be able to achieve it? We don't know. So now let's talk about the price of GameStop on June 21st. So at this point, we've got, I guess what I would look at as 2 scenarios. Scenario 1 is the company puts out good news, and I think everyone's praying for that, for Roaring Kitty, and just, for all the retail traders who got buried by the company putting out bad news. So the company could put out good news. And what would good news look like? Well, at this point, they could put out news that the 75 million share offering has closed. That means they're done selling. Now, what we know is that, I'll pull up the stock price again here. So what we know, if we look at the filings, was that on May 17th, they filed the shelf registration to sell 45 million shares. All right. It was then on June 24th that they put out the news that they had completed the offering and raised $933 million. All right. They raised a lot of money in that offering. So May 17th was when they put out the news. That was on this day right here that they're going to do the offering, and they closed it right here. So 1, 2, 3, 4, 5 days. So it took them 5 days to close this offering. Now, at the rate that they were selling shares, they were selling about 10% of the volume every single day in shares. So in order for them to sell 45 million shares, it took about 450 million shares of volume to slowly sell. You don't want to just dump all at once because you're going to drop the price of the stock, right? So they sold slowly over the course of like 5 days. So now they've got this new offering that they just put out to sell 75 million shares. And it's in addition to the 45 they already sold. So now it's a total of 130 million shares, right? I think it's 130, something like that, 110 million shares, 115. So now they've got these shares going out, and at this point, 110. I think it's 110. And now I just want to make sure it's right. So 25. So take 25 off of that. So you've got 20. So 120 million shares. Sorry. So 120 million shares they're selling here on the open market. That's a lot of dilution, and they're going to raise a lot of money by selling it. But let's think about how long it's going to take them. So they put out the news on the 6th. So 1, 2, 3, 4, maybe 5, 6 days. Could we get the news tomorrow or the next day? We could, but let's look at the total volume. So we think it's going to take about 750 million shares for them to sell 75 million shares. So doing 10%. So we had, let's see, on the 6th, we had, this was on the 5th. So the news came out the morning of the 7th. So it was actually the morning of the 7th the news came out. So we got 279 million shares that day, 130 this day. So we got 400 million. So we've got 430 million shares so far. So we're going to need a couple more high volume days for them to be able to sell the full 75 million shares. At least that's my guess. But I think there's a possibility that this week we could see news come out that they've completed the offering. Now it's speculative because we don't know. They may sell slower or they may sell faster. But based on the last offering and the time it took for them to close it, I'm thinking we might get that news out this week. That could be good news because people will be like, great, finally, they closed the offering. However, given they just did 2 offerings back to back, there is no guarantee that they couldn't choose to do another offering if the price goes back to $50 or $60 a share. They're clearly motivated to sell shares and to raise money. So possible good news is that they could close the offering. Also possible good news, Ryan Cohen could add shares to increase his stake back to about 10% because his stake is going to be diluted by these offerings. So if he wants to increase his stake, he could add more shares. And that would be a good vote of confidence if he did it, and people I think would appreciate that, and the stock would probably go up a little bit in response to that. But he might also just wait until the stock is cheaper to buy it, or he might choose not to buy it. And then we have a wild card. The company could have, wild card news. They could make a strategic acquisition, right? Or some type of partnership. They could partner with, one of these gaming platforms that's already well established. I don't think it's going to be Twitch because Amazon owns them. I can't imagine they're going to sell Twitch. But you've got Steam, you have some others. So maybe, I don't know. I don't know if they have enough money for some of these things. But it's something to think about. In 2022, value, let's see, from Steam was estimated, I believe, at $7 billion. So right now they don't have the capital to buy it outright. But, again, you never know. That was, things could change and deals could be made. So, these are scenarios of possible good news that could come out that could help send the stock back towards $30, $40 a share, maybe. And then the other scenario is we don't have any news in the next 2 weeks before June 21st, in which case Roaring Kitty and everyone else is just praying for momentum to send the price back towards 30. I mean, all we have at this point would be prayer, deep prayer, because, you know, I mean, obviously I mean, you could see this pattern. We're back down here at the lows. Now, I was kind of looking at this for an entry off of 23. I was thinking about double bottom, but I didn't take it. And the reason I didn't take it was because I was looking at the same thing yesterday off of this low right here of 26, and it broke through with no resistance. It just went lower. So I was like, ooh, I don't know, maybe it's not this thing. You know, if the company's selling shares, the technicals aren't going to be very well respected. So until we have that offering closed, but of course, as soon as the offering is closed, I think the price will bounce. I was hoping to get a position where I could be in for that news, but I'd want to be in closer to 23, not at the current price. It's just too much risk right now. So, all right. So praying for momentum to send the price back towards 30. And then I guess, you know, the selling continues, right? We don't have the news of closing the offering. They're continuing to sell shares, or maybe they aren't, maybe they're not. We don't really know. Shorts are continuing to sell shares. We know from looking at the short volume that's been posted on, TradingView, that there's a ton of people shorting it every single day. Now, it's not increasing the short interest because these traders are shorting and then they are closing those positions. So you can see right here. So this shows you the amount of volume that's taking place. So people are shorting, and it is more shorting volume than, let's see, this is 1 year, but it's more shorting volume than we had in 2021. So the only thing in 2021 was that there was a large accumulation of short positions, slow and gradual over the course of years. And then you had the spike of active day trading that created short positions, but they were closed very quickly. This is just the volume. It's not the total cumulative position. So it's a little deceiving. As far as we can tell, short interest remains around 20%. And at this point, to be honest, shorts are not in a dire position because, well, you know, let's look at the price. I mean, if we look at the price here, shorts are, you know, they're kind of in the driver's seat right now. So let's look at, you know, if you were short, where would you stop out of this? Right? I mean, you've got this recent high way up here. If you went short against that level, or you went short as soon as a company came out with news, well, in that case, you probably already covered your position. So now active traders who are shorting, maybe they're just shorting little spikes. They're shorting little pops, shorting as we're, you know, riding the top of the Bollinger Bands, covering as it comes back down, shorting off the 200, covering as it comes back down, just actively trading it the same as day traders might to the long side, which is fine, you know, but any traders who are short and are holding a deeper position, they're not anywhere near max pain. No one would have added down here in their right mind. So I think shorts are in. I think they're in the driver's seat. I think they're in control. And at this point, I think it's going to take a lot for the stock to get back up to these levels. I mean, if we look at the volume, let's just think about this for a second. We look at the volume here. This amount of volume, same amount as back here, this amount, but the price didn't surpass the previous peak up here. That's a concern. So that tells us that into this volume, there were a lot of people who were selling because there was too much supply. Right? There wasn't enough demand to send the price all the way back up here. Now, it did for a second get up pretty high, but it wasn't able to hold those levels after hours, as we know, and the price came all the way back down. So in order to get back up here, we're going to need this much volume plus some. What's going to bring that volume in? At this point, Roaring Kitty exercising his contract, that might bring some retail volume in, but not enough. You're not going to get short stopping out and creating real volume until we break some big levels, and I'm sad to say I don't see it, but maybe there's a wild card. And right, Roaring Kitty's got to have a plan. There's got to be a plan. I mean, you don't just buy $68 million of a short duration option contract because you believe in the long-term plan. He's got something up his sleeve. So I guess we'll just have to wait and see. But I hope you found this episode helpful. If you did, make sure you hit that thumbs up. I hope you're subscribed to the channel. And if you want to watch more episodes like this, I've got a ton that are coming real soon. So thank you as always for tuning in. And I'll remind you as always that trading is risky. My results aren't typical. So manage your risk, take it slow. And I'll see you back here for the next upload real soon.